Hey traders, it is Thursday, March the 4th. I want to recap on the markets just real quick as they're breaking down and starting to collapse here. Volatility is probably, well, it's starting to spike, but it could get a lot wilder. Overall, I want to also cover two positions that we closed out and why it's important to get stopped out of trades. So let's just take a quick look at the market here. This is the SP 500 30-minute regular chart. The one on the right-hand side is the daily chart. The bottom one is the 10-minute chart. Now, what we're looking at here, pretty straightforward stuff. More or less, the SP 500 goes into these oversold, these lime green areas that you see on the chart. Whenever the market gets down there, we typically see a 1 to 3% bounce in the market, usually within only 2 or 3 trading sessions. We've seen that happen over and over again, but recently it's been struggling and it gets oversold and has a bounce, gets oversold, has a bounce, oversold yesterday and had a little bit of a bounce again. Now the trend finally has turned orange on the SP 500. It's been trying to hold this technical trend. The bars are green when we're in a technical uptrend. When they go orange, we're neutral. When they go red, we're in a downtrend. So overall, you look at the SP 500 today, just in the last 30 minutes, has it changed its tune? Now, if we look at the daily chart, you can see this blue line is the 50-day moving average, very critical line in the sand, and we are clearly below that today. If you look at the volume in the last, this is a 10-minute chart, in the last 20, 30, 40, 50, 60, 70 minutes, it is big selling volume. There's some unloading going on. They typically say, dumb money buys at the open, smart money sells at the close. Well, yesterday we had huge money selling at the close, and that's not a good sign. And the market tried to hold up through overnight trading. And as soon as volume stepped in here, I mean, it's all to the downside. We're seeing some pretty big selling going on. Now, the SP 500 just on the cusp of rolling over here. If we look at the NASDAQ, which led the way higher all of last year, it is clearly in a downtrend. It's leading the way down. It gave us an early warning of mixed signals several days ago, about a week ago, and then it went red, and we actually saw it bounce up to this 20-day moving average, gave us agreed buying where everyone thought the stock market was going to go higher. Everyone piled in. There was 15 people buying shares on the NYSE to every one person selling a share on the bid. And when it's over this blue line, which is 3, that's a pretty significant level. So 15 definitely was screaming, hey, there's a big problem. Everyone thinks the market's going higher. They're getting positioned for it. And typically the market goes the opposite of what the masses are thinking. And of course, that's what we've seen from that level. If we just zoom in a bit here, you can see the downside potential. We got a drop, we've got the bounce, and this is a Fibonacci extension saying the 618 is the first level. Price should fall down and try and bounce and try and hold. If it hits this level and consolidates, typically we're going to see that 100% measured move. That's what 1 means over here. So we still got more room to the downside, and I think we're going to see the VIX spike today, tomorrow. Friday could be a bloodbath. We'll have to see if Friday is strong selling into the weekend. No one wants to hold. Everyone is pretty spooked with the yield spiking up. It's got people pretty nervous. Big question is the Fed going to step in, or the plunge protection team? Some people say come in, step in late in Friday and just drive the markets up with the robots so that it doesn't look like a really weak close. A really weak close on Friday typically means Monday could be an absolute bloodbath. Might gap higher at the open for the big institutions to unload shares into the volume, but then they could just keep selling and drive the market down next week. So lots of interesting price action. Now let's go take a look at our band hot list. Most sectors are now in a downtrend from a short-term standpoint. In a longer-term stage analysis, a lot of them are putting in this distribution topping phase. A few of them have started bear markets or stronger-term downtrends going forward. Now, we were in this trade, PBW. It was a very quick trade. The market had a little reset and consolidation, and then when it reset to give us a new buy signal, the market didn't have a whole lot of upside steam. So overall, we did see price here. We got in at the opening bell. We did see it go all the way up to around 9.5%. We pulled some money off at this blue line here. This is our 7% first target. And then we had a trailing stop in place, and we got out down over here on the play. So we made some money on a quarter of the position, lost a little bit on 3/4 of the position. But as you can see, it's a huge difference from if we were to have stayed in that trade, we would be down, 25% right, as of today, because we didn't get stopped out. As much as we love this sector, I was thinking it was going to go higher. We have to follow our rules. Typically, if it breaks a previous pivot low, if it breaks like a 15% trailing stop in these type of leading sectors, usually means some serious damage, especially when you're under the 50-day as well. So we got out there for a small loss. Another one that we actually got out getting stopped out on was Hale. We got into Hale. It had a really nice run. We got in at the open this day. It ran all the way up over 8%. We took off some partial profits at 7.5%, and then it rolled over and we got out down over here. Now, if we were still in that trade, we'd be down about 11%, but instead we got out somewhere with the trailing stop getting hit. Because we took a nice profit on a portion of it and sold the rest for a small loss. Again, it was overall a small position. Now, keep in mind, we also had some other plays in here. We played the MJ, which ended up giving us a really nice 48% move on a portion of our position. We got out somewhere right over here. Market gapped up with an exhaustion top, sold off, hit a 15% trailing stop the same day, and we got out. And so our batch of band trades ended up turning into a small profit overall. So even though we took a couple losses in there, we still made money. We moved to cash, and now the stock market is in free fall mode. And if we look at the stock market again, let's just take a look. The NASDAQ, from the high that it had, is down over 10%, just over 10% as of right now. So while we pocketed about 1.5% in total when the stock market had a bounce and crash, the stock market is down 10 times of, we generate a profit and it's down 10%. So it just goes to show how important that is. If we were to look at this Fibonacci extension for a downside move on this market, let's just carry it over. Again, we've got this still some more downside in the stock market. I think that's where it's going to create a spike in the VIX. We got some fear in the market. It's pulling precious metals down. It could be very short-lived, quick sell-off in 1 or 2 trading sessions. Maybe Monday we get some spike low or reversal bar. But overall, we'll see if the market get back into some type of consolidation like this, where the market comes down, consolidates, and then flushes out. Here we are. We've come down. It's consolidating. It's starting to flush out. And then it might trade sideways for a couple months, build a platform, and for all we know, this market could start another leg and just keep going higher. We'll have to play it by ear, one bar at a time, and we just follow the markets. If we do get into a new uptrend, we'll be in for another massive leg to the upside. I got a feeling it'll have some pretty good power behind it. If it rolls over and starts to give longer term sell signals, there's a lot of downside potential in this stock market still. Obviously, there's potentially for a massive bear market at some point, but we are not looking there yet. That takes a long time before a bear market will unfold. Anyways, hopefully that gives you some insight. Getting stopped out, minimizing your losses is critical to trading. It's better to take a small loss than to hold it, because you never know if this market's going to come back. And sometimes, even if it does come back, it could sell off so far that you hit the breaking point, you exit the position, or you get a margin call. You're forced to exit, which happens to most people, believe it or not, because most people are over positioned, too much margin in their accounts. And then the market rebounds without you, and you literally get out at the worst possible time in a correction. That's what happened to most people during this market crash. During this crash, we ended up playing a bond trade for a nice 20% gains. Bonds spiked up while the stock market crashed, and then we moved to cash, and we waited for this next move, and that's how we played that. So right now, cash is king. Let the market shake up and shake everyone out, and we'll look for a new opportunity, whether it's a long or a short or inverse play somewhere down the road. Take care. Bye-bye.